Imagine waking up to your 401k slashed in half overnight, not from a recession, but from the hottest AI stock exploding like a digital time bomb. What if OpenAI's trillion-dollar IPO doesn't make you rich, but wipes out Wall Street's gains in a single terrifying day? Stick around, because the shocking truth about your savings might just save them. But how does a dream IPO turn into a nightmare? We'll uncover the hidden triggers in a minute. Before we dive into the chaos, let's rewind to the calm before the storm. What set OpenAI up for this high-stakes gamble? Let's set the scene. It's early 2025, and the AI boom is Silicon Valley's golden era. OpenAI, the brains behind ChatGPT, has ballooned from a scrappy startup to a $150 billion behemoth, fueled by Microsoft billions and viral tools like DALL-E. Sam Altman, the visionary CEO, pitches the ultimate play, going public on the NYSE, promising trillions in value as AI reshapes everything from jobs to healthcare. Wall Street's buzzing. Investors from New York pension funds to California tech bros are piling in, betting big on the next NVIDIA. But beneath the hype, cracks are forming. Regulatory probes into AI ethics, whispers of overvaluation, and a U.S. economy teetering on inflation's edge. This isn't just an IPO, it's the test of whether AI saves America or sinks it. Ever wondered if your retirement fund is too exposed to tech? Drop a thought in the comments. Your story might mirror what's coming. The tension's rising like a stock ticker on steroids. What overlooked red flags were screaming danger right before launch day? Fast forward to Q1 2025. The road to IPO feels unstoppable. OpenAI files S1 paperwork, teasing explosive growth. Revenues up 300% from enterprise deals, with promises of AGI breakthroughs by mid-year. Rivalries heat up. Tesla's Elon Musk sues over stolen ideas, while EU regulators slap antitrust warnings, echoing the FTC's grip on big tech tensions simmer in boardrooms. Altman's pushing for a $200 per share debut, but insiders leak doubts about unsustainable hype. Wall Street's divided. Bulls like Goldman Sachs pump it as the decade's moonshot, while bears on CNBC warn of a .com 2.0. Your average investor? They're FOMO buying via Robinhood, pouring in 401k cash without a second thought. The atmosphere's electric, conference calls buzz with optimism, but quiet chats in DC reveal fears. What if AI's magic is just smoke and mirrors? Little do they know, one tweet from Altman could ignite the fuse. Here it is, the moment Wall Street's dreams shatter. What goes wrong in those frantic first hours of trading? Launch day, March 15th, 2025. Bells ring at the NYSE, confetti falls, and OpenAI shares rocket 40% out the gate, $280 and climbing. Altman's on stage, grinning as billionaires cheer. But then, the unraveling. A leaked internal memo hits X at 10:15 a.m. Eastern Time. OpenAI's AGI claims? Fabricated benchmarks, hidden losses from data center blackouts. Panic sells trigger. Hedge funds dump 20 million shares in minutes. By noon, the stock's plunging. $250, $180, $120. Vivid chaos unfolds. Traders scream in pits, CNBC flashes red alerts, and your phone blows up with Robinhood notifications. Your portfolio down 15%. Perspectives clash. Altman's defiant tweet. This is temporary. AI's future is bright. Fuels more sell-offs, while Musk piles on with memes calling it the open fraud. From a retail investor's view in Ohio, it's gut-wrenching. Savings built over decades evaporating as algorithms amplify the freefall. It's not just numbers. It's families staring at screens, wondering if dinner's on the table tomorrow. The core horror? One company's innovation exposes the fragility of America's wealth machine. If this hits too close to home, hit that subscribe button now. I'll warn you about the next AI trap before it bites. The dust settles, but the wounds are fresh. What desperate moves do markets and leaders make in the hours after the plunge? By market close, OpenAI's down 70%, a $100 billion wipeout in hours, dragging Nasdaq into bear territory. Immediate fallout hits hard. The SEC halts trading, probing market manipulation, while Altman's hauled before Congress for a fiery hearing. Reactions pour in. Wall Street titans like Jamie Dimon blame hype addiction, but everyday Americans feel the sting. Pension funds lose $50 billion, sparking viral TikToks of retirees in tears. Emotional toll skyrockets. Suicide hotlines report spikes in NYC, and Silicon Valley VCs huddle in emergency calls, slashing AI investments. Physical chaos too. Protests erupt outside OpenAI's San Francisco HQ, with signs reading, "AI stole our future." Significant moves follow. The Fed injects $200 billion in emergency liquidity, And Biden admin floats AI Stability Act drafts. But for you, the viewer, your brokerage app's frozen and that quick buck on AI just cost a down payment. Picture your own portfolio flashing red. What's one stock you dumped today to stay safe? Share below. Let's learn together. The crash echoes for years. What lasting scars does it leave on Wall Street, AI, and your wallet? Months later, the ripples turn tidal waves. OpenAI survives as a shadow valued at $40 billion. Altman ousted in a board coup, forcing a pivot to ethical AI consulting. Broader industry. A tech winter grips Silicon Valley. Layoffs hit 500,000, with startups folding like dominoes. Reforms roll out. The SEC mandates AI risk disclosures. And Congress passes the Investor Protection Act, capping hype-driven IPOs. U.S. economy stumbles. GDP dips 2%. Inflation spikes to 6%, and your savings? Retirement accounts average 25% losses, delaying retirements by 5 years for millions. Lasting impact? AI shifts from savior to suspect. Funding dries up, innovation slows, and public trust erodes, with polls showing 60% of Americans fearing big tech overreach. Reflecting back, this what-if exposes a brutal truth. In the race for AI dominance, your nest egg was collateral. But it also sparks hope. Wiser regulations could rebuild stronger. The question lingers. Was this crash a wake-up call? Or just the beginning? Remember that hidden trigger from the hook? It was the memo, and it proves hype kills faster than code. Phew, that was a wild ride through AI's dark side, wasn't it? If OpenAI's crash has you rethinking your stocks, wait till you see what's brewing with Mercer AI, the silent job killer that's already scouting your resume. What if it's targeting your career next? Click now to find out before it's too late. Thanks for watching. Drop a comment on your biggest AI fear, and I'll see you in the next warning. Subscribe for more what-if breakdowns on the tech traps heading our way. Don't get caught off guard.